You should be tapping into Inverse ETFs. The global market kicks off this week with a host of negative news. We have a worsening COVID situation in China, sky-high inflation in the United States, slowdown fears in the United States and the Eurozone, and looming rate hikes by the ECB. China's renewed COVID cases. China's capital, Beijing, is experiencing an explosive COVID-19 outbreak connected to bars. On Saturday, a government spokesman said that the commercial hub, Shanghai, conducted mass testing to contain a jump in cases tied to a hair salon, as quoted by Reuters. There has been a new tightening of COVID curbs in Beijing since Thursday, with at least 2 districts closing some entertainment venues. Though China's infection rate is low by global standards, it maintains a zero COVID policy. China had just started loosening curbs after 2 months of strict lockdowns. Now, fresh lockdowns means renewed supply chain issues. High U.S. inflation. Meanwhile, the annual inflation rate in the United States unexpectedly accelerated to 8.6% in May of 2022, the highest since December of 1981, and compared to market forecasts, as well as April's print of 8.3%. Energy prices jumped 34.6%, the most since September of 2005, due to gasoline of 48.7%, fuel oil 106.7%, the most significant increase on record. Electricity 12%, the most significant 12-month increase since August of 2006. And natural gas 30.2%, the most since July of 2008 per Trading Economics. In the upcoming meeting, several market experts expect the Fed to hike rates by 75 to 100 basis points. CNBC's Jim Cramer wants the Fed to raise rates by 100 basis points. However, I expect a 50 basis point hike like most market participants. But any hostile rhetoric from the Fed will send the market into a tailspin. ECB to hike rates. Meanwhile, the ECB will likely end its QE program at the start of July. The ECB intends to hike rates by 25 basis points in July, but may also enact a 50 basis point rate hike in September. The new ECB projections expect annual inflation to reach 6.8% in 2022, followed 3.5% in 2023, and 2.1% in 2024, higher than in the March projections. Annual accurate GDP growth projections have been revised to 2.8% for 2022 and 2.1% for 2023 compared with March projections. However, the GDP growth outlook for 2024 has changed. Inverse ETFs in focus. Against this backdrop, I highlight a few inverse ETFs that may be tapped this week. Although rate hikes worries have been rife globally of late, investors are sometimes taken back when news hits the market and markets fall. Hence, markets will likely remain rocky this week, and inverse ETFs may offer some gains. Number 1, ProShares Ultra Short QQQ, ticker SQQQ. The fund invests in financial instruments that ProShares Advisors believes in combination should produce daily returns consistent with the fund's investment objective. The index includes 100 of the largest domestic and international non-financial companies listed on the Nasdaq stock market based on market capitalization. The daily total return is over 90% year to date. Number 2, Direxion Daily Technology Bear 3X shares, ticker TECS. The fund, under normal circumstances, invests in swap agreements, future contracts, short positions, or other financial instruments that, in combination, provide inverse, opposite, or short leverage exposure to the index equal to at least 80% of the fund's net assets, plus borrowing for investment purposes. A daily total return is over 70% year to date. Number 3, ProShares Ultra Short QQQ, ticker QID. The fund invests in financial instruments that ProShares Advisors believes in combination should produce daily returns consistent with the fund's investment objective. The index includes 100 of the largest domestic and international non-financial companies listed on the Nasdaq stock market based on market capitalization. The daily total return is over 60% year to date. Number 4, ProShares Ultra Short Technology, ticker REW. The fund invests in financial instruments that ProShares Advisors believes in combination should produce daily returns consistent with the fund's investment objective. The index is designed to measure the stock performance of U.S. companies in the technology industry. The daily total return is over 60% year to date. Number 5, Microsectors U.S. Big Bank Index 3X Inverse Leverage ETN, ticker BNKD. BNKD. The notes are senior unsecured medium-term notes issued by the Bank of Montreal with a return linked to 3 times leverage participation in the inverse performance of the index. The daily total return is over 50% year to date. Number 6, ProShares Ultra Short S&P 500, ticker SPXU. The fund invests in financial instruments that ProShares Advisors believes in combination should produce daily returns consistent with the fund's investment objective. The index is a measure of large cap U.S. stock market performance. The fund is non-diversified. The daily total return is over 50% year to date. Bottom line, the benefits of inverse ETFs have to do with alternative ways of placing bearish bets. Not everyone has a trading or brokerage account that allows them to short sell assets. These investors can purchase shares in an inverse ETF, giving them the same investment position they would have by shorting an ETF or index. Inverse ETFs are considered riskier than traditional ETFs, but they're bought outright. This makes them less difficult than other forms of bearish bets. They're often unlimited risk. When an investor shorts an asset, the investor could end up losing much more than they had anticipated. Another risk is that major stock indexes have historically risen when the timescale is long enough. This makes it risky to use inverse ETFs as part of a buy and hold strategy. History suggests that the index will bounce back sooner or later from any losses in recent years. Inverse ETF investors need to keep a close eye on the markets. They can attempt to exit their positions before the corresponding index rallies. I enjoy sharing my insight with you and helping both of us become better traders and investors and find some level of success. You have made it to the end of my video. Thank you for watching. Please check out my other videos and the description for great deals and sign up bonuses. Peace.